Good afternoon. This is Chris Brecher with the Simpler Stocks free video for May 25th, 2016. As you can see, it's about 16 minutes before 3 o'clock Eastern. Doing this about an hour ahead of time. I'm getting on a long time on the Simpler Stocks chat today just to go over strategies. We've had a big day today, so let's get right to the market so I can show you what's going on so far. Right now we have the ES is up 25.75. Sort of a nice little short squeeze in here. NASDAQ up 85, Russell up 23. We've been talking about this for a week, that if the Fed is right, that they're raising rates because the economy is stronger than we think, then small caps should go up. Not dividend stocks, growth stocks should go up, which the Russell 2000 is composed more of growth stocks. You have up here the Nikkei up modestly, 225. Transport's only up 36. In fact, as I'm talking right now, I'm watching some of the railroad stocks fall out of bed, which I'm not sure why. You have gold down 22, and basically what we got today is this. This is what I was worried about in here, and let me take off the futures on the left. It's right here. You have the ESs that we've been talking for a long time about, the ESs following the NQs. So if you put the ESs on the left and you put the NASDAQ on the right, the mantra last year was whatever was the weakest index, then it pulled down the rest of the indexes. So everybody thought the ESs over here would be pulled down because the NQs were under this moving average. So everybody for days has been talking about this head and shoulders, and as you see, we had this little blip here that got everybody caught short. Well, the whole idea in here is, since we're so used to this getting pulled down by this, when all of a sudden the NASDAQ started to form a constructive pattern, everybody scrambled all at the same time. So what do I mean on that? Look at the NASDAQ on the daily. You see that on the left and the right. Now on the right, I want to show you the little inverse head and shoulders and the trend line that was developing. Now, the problem is you have to buy on the break, which happened in the middle of the night, but it just exploded from there. So the whole idea is everybody got caught short on this. Even though it's hard to see, it's all scrunched up. The more times you can connect the trend lines, the more significant, as you can see there. Obviously, we're overbought now, but the whole key is the damage was done if you were short. Now, the whole idea on this, if you go to 195, you can also see this pattern in here. You can see it a little better now on how it broke here. Overbought, obviously, but it's up to the next line of resistance, which is 44.50. Right in this area here. Now, on the same front, look at the ESs on the left and right. You have the ESs doing this. Now, this one's harder to see because you can see it's still developing, believe it or not. Now, charting is always an art, not a science. So you could say, well, it's right here, it's right here. Whatever it is in here, it just broke it today. Let's put it that way. What I was watching in here was this. I was watching this little inverse head and shoulders, and there was a smaller one right here that we actually did a throwback right to it. This is the bigger one, about 20.55. In fact, I'm going to make this a little bigger so you could see it. This is the one a lot of traders are looking at. 20.52. See that right there? 20.27. That right there is about 25 points. 25 points from here gets you to 20.78. Why is that significant? Zoom out of here and look what the old highs were right at 20.78. So a lot of times these little bumps seem to contain big old rallies. So just keep that in mind, that that's what everybody's looking around, that 20.78 level. After that, we'll reevaluate. You have to understand, on a daily, no matter how bearish you want to be, we're not that overbought. Sure, we're overbought on a 78, but not on a daily yet. Very important in there to understand that we're not there yet. So what do you do in the meantime? There are two ways to trade this when you get a straight up market. Obviously, you could say, well, you should have jumped on the opening. That's not easy. Second, you look for consolidation, which, as you see in here, was tough. You got a tiny one there, but that was basically on the opening. That's not exactly fair. You haven't really had one yet. So the whole idea in here is, when you have the ESs up this much, either you look for stocks that aren't acting well, because the ESs are pretty high up here with a little negative divergence. You look for stocks that aren't participating, or you look for unusual option activity, or you have things prepared for the next day. So a number of things I'm looking at in here is, number one, I'm watching the rotation. What I mean by that is, if this does rally, you're probably going to see the stocks like the utilities and the consumer staples go down. That's because it's a rotation. When people get nervous, they buy the Cloroxes of the world. They buy the Procter & Gambles. So those could be stocks to go down. Other thing in there, you watch the oil stocks. Usually people start selling the oil stocks to buy the stocks that were the laggards. A lot of chatters out there about some bookkeeping things going on in PXD. And sure enough, the stock's on its low for the day. Other thing unusual that I mentioned before is UMP. Out of nowhere, this stock just starting to sell off today. I'm not sure why. And also, this is being led by NXC. Look at this railroad stock getting pounded. Now, one thing really interesting in here, obviously they're filling the gaps. But what's interesting is this could start to be a big old divergence in the transports if this happens. As you see, they've already sold off about 50 points today. If the airlines catch in too, this could have another leg down. Very surprising. You would think that this would pop over the moving average just like the NASDAQ. So I'm going to be watching that very, very carefully in here. A couple of other things I wanted to mention in here, just as a bookkeeping thing. One, we have an Austin membership coming up. Now what that is, it's a mentorship where you work with me, you work with a number of the other traders, and basically it's a 3-day meeting. And let me show you in here. I always seem to mess this up. Here you go. 3-day meeting, June 26th, June 28th. They decided to make me one of the lead speakers, which is very flattering. But basically, it's a meet and greet. You have 3 days of intensive training. You get to meet us for dinner, hang out with us, see that we're no different than anybody else. We just love doing this as a job, and we've been doing it a long time. So, maybe you can learn from osmosis at the minimum. But honestly, all kidding aside, these have been a huge hit, or usually booked months in advance. So try to go to the site. If you put it in now, you might be able to there are a couple of extra spots in there. But really interesting. We sit there in a room and go through, have big old computer screens up. Go to the link in here, simplertrading.com/Austin, as you see here. And you can see that we have big old computer screens up, and you can watch us live trade in action. Really exciting stuff. Other thing I want you to realize in here is we still have where it's $7 for a 30-day trial. Now, just to let you know, this includes all of this. We did the tiles sort of like Microsoft, where you have the chat room, where I'm there from 9 to 10. And I've been there on the last half hour just to help people walk them through the rest of the day. We have the premium videos, which are a lot more intensive than what you're listening to now. Email alerts where I send out unusual option activity, some funky intraday activity if I see it just in charts, and some index charts at night. We have the forum that's been very active where we post ideas back and forth. We have a meetup where about every 10 days I do a learning center where I'll do something on ATR trailing stop or unusual options. If you look under learning center, you'll see this mastering the basics. All these are free. Most sites charge extra for every little nook and cranny in here. They all come with your membership. So I hope you can take advantage of all this. Like I said, it's $7 for 30 days. And we will try to attack the market again tomorrow. Like I said, we're closing near the highs right now, and we'll see what happens by the end of the day. Everybody take care. I will talk to you tomorrow.